One of the most bullish stock market programs is about to go into a blackout. But what does this mean for us as traders and investors? As the FOMC effectively ends QT, could this be the silver lining that we've been looking for? In today's video, we take a look at where the opportunities lie and the oversold market conditions that we're currently in. What does history have to say about that? And of course, we take a look at the 200-day moving average and the breakouts in certain risk-on assets. Yes, everybody was buying over the last 24 hours and for some good reasons. But does the bonds market also agree with what stocks are doing? Let's take a look right now as we cover stocks, commodities, and cryptos in one video that is not to be missed. See you in a minute, guys. Well, welcome back, everybody, to a sea of green as markets recover thanks in part to the Federal Reserve and Jerome Powell. My name's Tom, and in today's video, we'll be going through the latest macro data and key levels. Just before we keep going, and we've got some amazing data to show you today, I want to say a big thank you. We're almost to 200,000 subs, and that's thanks to every one of you clicking those like buttons, subscribing, and commenting down below. If you haven't already done so, help us get to 200,000. What an amazing accomplishment over the last 5 years. Thank you so much. Let's now go through the buyback period. Yes, guys, it looks like we're going into a blackout. And of course, this happens multiple times a year, as I'm sure you're aware. 4 to 6 weeks prior to earnings, companies are no longer allowed to buy their own stock. And of course, 24 hours, I believe, after the announcement, they start to reinvigorate themselves into buying everything. Now, why is this important? Well, of course, it all has to do with artificially inflating prices. And 2025 is no different to previous years when it comes to massive buybacks. As you can see here, especially since the global financial crisis, buybacks have been a huge part of this market. And in many ways, they've helped to artificially inflate the US stock market to where we are today. Now, is this the biggest ever year? No, but it's certainly an epic amount, and it is close to 220, 223 really in some ways. And it may also be expected to rise further. Now, we'll talk about that in subsequent videos moving forward, but this will be an important factor because, of course, as soon as we see the Magnificent Seven stocks start to report their Q1 earnings, there'll be buybacks at the back of that, and the market tends to like to front run some of these things as well, knowing that there's going to be a huge amount of purchasing going on. Now, in our previous video, we talked about Goldman Sachs believing that we were at a Sigma entry that is basically a totally oversold market where everything was going to have to be bought by allocation funds. And as you'll see today, cash is doing something very interesting and well, basically saying that maybe we've hit the bottoms or very close to the bottoms. Now, what's the good news? Well, the good news comes actually out of the Federal Reserve. Over on X, links in the description down below if you want to follow us there, we posted a couple of thoughts past this press conference. And what was it? Well, there were a couple of things. Effectively, the end of QT has basically happened today. Now, there are some reports of, I think it's MBS, being still there, et cetera, but for all intensive purposes, you can see here that the Treasury securities from 25 billion to 5 billion, and effectively the Federal Reserve has said that they're going to be even more reactionary than they usually have been. The rates kind of dot plot, which you'll see in a moment, is still showing cuts overall down to 4%. And of course, they're fearful of the potential of a recession. So what does this mean? Well, it means that in 2025, we have to pay super attention to the White House, which I'm sure you're aware already. We all are, instead of the Federal Reserve. And they're just going to be kind of going along with trying to create the Fed put. Now, if you're not aware, it's pretty much that the market is now addicted to central bank policy and indeed government policy as well. And it is always expected that there is a buyer of last resort on markets, whether that's the Fed put or, of course, something we've discussed this year, which is the Trump put. Effectively, every time the market goes into a correction phase, similar to what it has done now, or anything else, the market is expecting strong movements. And of course, what we know is the Federal Reserve could easily get rid of QT and go to QE. And it's been one of our arguments that we've discussed here before on why we're not necessarily super concerned about the markets at this stage due to the fact that they can always juice it back up. Now, probably not surprisingly, during every single fall in markets, guess what the discussion is? The Fed put, the Fed put, the Fed put. Look, guys, eventually this is not going to hold up. But for now, the markets are addicted to a sugar rush of absolute debt. And do remember, we're starting to see foreclosures in especially properties, some parts of America, some parts of Australia even, and some parts of, which is where I'm from, of course, and some parts of the rest of the world. Things are starting to get a little dicey. But at the same time, it can hold on for a long time until it gets super toxic. So are we looking at a subprime 2.0? We'll be talking about that in later videos. I actually do believe that things are getting more dangerous than ever before. But take a look at this, the Fed put story count. Yeah, we're addicted. It's all good. And that is partially why markets were rallying over the last 24 hours. Now, another thing that we brought up is Goldman Sachs. Now, a lot of you in the comments section said, Tom, why the hell are you even using Goldman Sachs stats? You know they can't be blah, 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 blah. I get it, guys, but this is just a reality as well. So when you look at this, this is still a data stat. And this basically shows that CTA estimates that they have to purchase. They have to purchase. It's not really anything else. They're going to have to buy, and they're going to have to buy around $45 billion worth of tape. So this is a huge deal. Why? Because it means that there is another level of liquidity that has to come into the markets along the signs of basically entering or exiting QT, and of course some of the data stats that we'll share with you in a moment. Now it makes us question, is the Magnificent or are the Magnificent 7 stocks going to become the best kind of investment of 2025? Well, we've argued all year that it's probably over for these in terms of being the best in the market. If you want the best percentages, go to the mids, go to other sectors. We've talked about defensives, healthcare still second or third best performer this year. Gold, obviously, number one of the major sectors. And metals in general coming good over the last couple of weeks, specifically based on tariffs and, of course, geopolitical tensions. But we cannot get away from the fact that the Magnificent 7 entered into effectively a bear market where they dropped over 20% from the top to the bottom. Now, when you take a look at this based on a PE ratio for something like Nvidia, arguably the most important stock in the world right now, then we are getting to pretty tasty bottoms. This is where we've generally seen at least a rally, if not an extreme rally off these levels. And the data seems to be backing up when we're looking at rate of change as well. Take a look here at the rate of change of the FANG stocks. So, of course, similar to Mag 7. And have a look here at the rate of change down near the lows. And this is from Seth Golden over on X. And you can see here that we are hitting a level of pretty large turnaround potential. And this is something we've seen in several of the oversells over the last couple of years. And I think it's really important to face the facts that when you get to these levels, you often at least expect a bounce. Now, I liken that to something over here. Did we see a double bottoming bounce back here? Yes. Was that the actual low of the sell? No, it wasn't. So we have to keep that in mind. But of course, because the Fed put, the buyer of last resort, the Trump put, all of these things could be changed pretty quickly. There is some positive action that is starting to come through, and that's a rare oversold condition. At the same time, we obviously saw 2 upwards days. Some people argue it's 86% and 90, but who cares really? The point is we had 2 massive breadth stock advancing type of days, and that can signal a couple of things. One, that we do sometimes come to a new low, but it is usually temporary, and that the 2-month data stats from this are hot, 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 hot. And no matter what stat that we're really sharing at the moment, it looks like 2 to 3 month stats look really good. Here are the ones when you've got 2 after an 8% plus drawdown, and you'll notice that 6 of the 6 times we either tested the bottom again or made a new low before going back up. Not necessarily a super new low though. So I think that's important to note. And yes, it's happened previously, but it doesn't mean it has to happen again. Now we've got sentiment reports. Sentiment reports are in the dirt. Of course, the media, everything else, a lot of polarization this year. I'm sure everybody out there, you guys, we all have our own opinions on how this market looks. But again, when you see reads like this, especially coming off an all-time high, it usually means that there's some form of relief rally. Now, is that a dead cat bounce and it only rallies to like a 61.8 golden fib, or is it something more? Well, a lot of that's going to come to how big a wall of worry are we really climbing. Now, have a look here at the FMS cash rising to 4.1%, ending the Bank of America FMS cash rule, which is a sell signal. So basically, we became complacent. Everyone took leverage. We've talked about this a lot. 3 times leveraged ETFs became like the hottest thing. Second biggest trade in terms of options was Bitcoin ETF options. And we had huge amounts of speculation at the peaks recently. Since then, we've wiped out quite a lot of leverage. And when I say we, it's not us. It's obviously Evil Wall Street and the algorithms. But at the same time, you can see that they've pushed it down and people got are basically complacent. Now we're seeing fear rise, and it's not just fear on sentiments, it's actually people putting money back into cash. And that's an important aspect of bottoming off in markets. Now, we know that charts such as this that we've been sharing for the last week do show us big bottoms, guys. And we also know that equity put calls, too many puts start to appear. And again, the 2-month, 3-month stats, 6-month, 12-month stats all look pretty positive. There's a good chance that this, with oversold statistics such as a 3 standard deviation move from the 50, all point towards, something kind of happening. But it doesn't just stop there. It's also about speed. When markets are super hot, then crashes can be super fast. And that's, of course, what we saw here. One of the fastest market corrections of all time. Here are the stats again for the next 3 months, and they're pretty solid in previous periods. So it does suggest that that's happening. Now, that doesn't mean, though, that the US is the best market in the world at the moment. Of course, it currently isn't. Gold is doing amazingly. And of course, we've seen a rise of German stocks, Chinese stocks, European financials. All of these are technically outperforming the S&P over the last couple of months. But that doesn't change that people are still buying the dip. And why do we know this? Well, it's dark pools. The 4th largest dark pool for a big S&P 500 fund just came through. It comes through at the same level that the first one did. And I don't think it's a sell. Even if it was a sell, it would probably be temporary. Did we hit the 200-day moving average yet? The answer is quite simply no. And even if we do find a new low, again, we've got some really big support, some really big put levels coming through. Remember, this week is OPEX. That means it's a quad witching event. So much going on. XLK also found some support near the end after selling off. And you can see there was a cluster of sells for day traders, then a little bit of a cluster of buys, and that times in well with where we've seen some larger trades. Remember, these are big, but they're not notable. This one over here is notable. And again, it's around that basing structure around where we found ourselves at the end of the trading session. The Qs also did this before, of course, rising back up. And this is, I think, always important to state the facts on. IVV also had some of the largest trades, another S&P 500 fund, about 3-4 sessions ago near the lows. And again, I think this symptom is a cluster of purchases. So what that basically means is that now we go into chop and structure and all this stuff that we see in technical analysis, but at the same time, it's likely, not guaranteed, but it's likely that these are buys based on the current evidence. Where we do see actual real inflows coming in, though, is the crypto market. Bitcoin broke out over the last 24 hours, and it has shown now 2 massive sessions of significant increases in overall flows. And of course, that's been found in these markets. Let's now have a look at the sector rotation. It was basically risk on over the last 24 hours. Consumer discretionary, one of the worst sectors of the last year, the last 3 months, so this year so far. And of course, we've got here ITB as well, which is home construction. These kind of things have been oversold, and they've been sold pretty hard. Semiconductors and tech also finding some bids, and the defensives down below. That's what you would expect from a risk-on style move. As you can see here, this is what's happened over the last 5 days. And as we go into the S&P 500, we closed at almost the identical level that we did before we sold off. Now, we do have 2 wicks here, which I think is notable. But look, you have to take some positivity out of the Federal Reserve, effectively ending some form of QT there. I think that's like a catalyst, that can also help. And now we're looking, of course, to the White House on what happens next and, are we going to get more shocks, etc. A lot of you do expect more shocks. I'm interested to see the latest sentiment survey. Is that thing in the dirt? Are we down to 15% bulls? No, that's probably going to be a strong counter trade if that does happen. Options high and low levels, here they are. The previous session, of course, did hold the anchored VWAP, which we suspected it would. And we're moving closer towards the all-important daily 200, which currently sits at 57.60 and a supply level. We're really going to have to pay a lot of attention to this. The way it reacts to the 200, I think will tell us a lot about whether we're going to get an all-time high, or at least a nice rally, or whether we're going to get more of the potential drop afterwards and something that a lot of you won't like, which is something like this. These are the bottom levels still that you should be paying attention to. Let's now have a look at the options together. What's going on in the options world? Well, first up, we have here quite a lot of action going on the call side. All of a sudden, we're creeping into that positive gamma potential here. 5700s all over that 200-day. You can see they're actually starting to strike to those levels. That's going to be the next 24 hours. Then we look at the 21st, which is, of course, Friday, and we get 5700. Now, I did think, and a lot of us did agree, that there was a good chance the market would try to get up above 5,700 by Friday close. That's just to basically make as much money for the big options market kind of sellers. So in this case, it does make sense. Remember, the Thursday can be wild ahead of OPEX. You could look at max pain, you could look at other things, but I would just say, look, it's generally the volatility can be more fierce on the Thursday than the Friday itself. For now, all we know is that 56 is a very interesting support from the put level, and 57, it would be good for the market to get above 57 and just kind of float around there potentially. Let's now have a look at the other stocks, the main ones here in terms of options. Any information, 220 still the low for something like Tesla, which has since risen, sitting above 230, and of course 250 is where the core wall is for Tesla. So still stuck in the range there. Nvidia, yeah, that's that 118, 120 put that most people will be looking at this week. And of course, you're going to have to hope that it stays above there. It's pretty key. And for now, Nvidia has some decent structure on it. Let's now take a look at the charts. First up, bonds market has improved. We reported on this. We'll get more data in over the next 24 hours for this particular indicator I use. And it did show that the bottoming process could be underway, which is good. Yields dropped based on the Fed's dot plot, et cetera, et cetera. And you can see here the 2-year dropped substantially. The market's not going to hate that, of course. And they don't seem that worried about inflation, but let's be real, the Fed usually doesn't know what's going on. So we'll find out how inflation ends up playing out with these tariffs. And high yield junk seems to be very stable, which basically tells us there's no cause, at least in the market right now, for a shock further than what we've already kind of seen. That's important to know. Dollar index, yep, it keeps falling. It's kind of basing a little bit. It's a dull market. I would not continue to buy or try to go to the buy side on the dollar. I just wait and see. And I think that's what we're doing with the dollar there. We still maintain over the year, though, that it will most likely decline. Gold continues to be strong. Very cool. 3,050. Nice. It seems to be just absolutely plowing through 3,000. But I still wouldn't be surprised if it goes sideways at some point soon. The reason why is because everybody's on board this. You know, when we've been on board it and people have hated it several times, whenever everyone gets on board something, and I'm seeing it trend now on X, that's the first time in a while gold's trended this hard, then you've got to just be careful. But, you know, we're still maintaining 3,600 by the end of the year, and we hope we can get that. That's our new call post 3,000, which we made a few years ago. Now let's talk about copper. Yeah, strong. Metals are strong. Look at this. Look at this thing. It's absolutely flying. You can see here that silver is just is coiling up. This is going to be a fairly decent trade, I think, if it breaks to the upside. So certainly some cool stuff here. I wouldn't mind a white low with like that kind of action on it. Very interested to see how silver ends up trading around here. Still bullish on it over the medium term. And Tesla stuck in the range. There's really nothing to say. 250, 220, 250, 220. It's just kind of like a buy the dip, sell the rip kind of thing. AMD has been more exciting. First time in a while we can say that. We've had 120 previously, had some big dark pulls on it. They will probably want their money back, I'm sure, but there's no change of trend on higher timeframes. I do like some of the small timeframe structure down here though. So AMD absolutely in the dirt, putting pressure on that downward trend line you can see here that's been going on for a while. Certainly some interesting factors going on there. When we have a look at the Magnificent Seven, it has not made a new high. Take a look at this. We've got new low. We don't have a new high, but the volume is there. I would say that there could be a good day on the mags at some point if we keep recovering, but we must look for the breakout. That would be key unless you're a speculative kind of trader. So you look at the 4-hour, the 2-hour, you're going to see, of course, potential of a bottoming structure. Potential is the key. HSI hit the 25,000 area, which you can see here. Always take it just before a round. So that's the area I had. Do I think this is a good TP for China stocks? Yeah, I do. However, at the same time, I still think there's more left in it. This is just a target that we had set a long time ago, and I would say we achieved it, and frankly, it's achieved. So that's always a good point where if you want to reduce, then of course you can make your own decisions and figure that out. You guys make your own decisions, of course. US 2K, what's going on here? Nothing much. Yes, it broke up a little. Yes, it looks a little bit better, and I'm sure a lot of people are like, thank goodness this thing is going bullish finally. Yeah, it's okay. I do think I prefer the S&P and NASDAQ for now, though, and you can see why. The structure itself is easier. The actual break of the previous sessions was there, so we actually changed trend on smaller timeframes already on these. And of course, usually expect the bigger caps to lead the charge, the smaller caps to come along secondary. So Yeah, very nice kind of pick up here in the NAS for now. We're really looking at the daily 200 on the S&P though. So use the S&P and trade it accordingly. Ethereum got some big bounce in it over the last 24 hours, kind of almost tried to get to 2100. And yeah, I mean, it's broken through. Still nowhere near changing trend to the upside for a swing trader or anything. The main good thing in the crypto market was that Bitcoin broke up and kind of tried to take out this supply, this 86,000 supply. So you could almost argue, I guess you could, it's arguable whether this supply is actually, being treated as such, and therefore it's a resistance. But this is a good sign still for the Bitcoin market. There's some speculation over announcements and this and that. I'm not really sure what's going on there just yet. We'll update when that happens. But from the price action side, certainly an improvement. It's probably still early days. We really haven't taken out these major levels such as the 94,000. That's going to be a major swing zone, huge flow zone, big area, but still positive kind of stuff going through. As always, guys, if you loved today's video, then make sure to subscribe, smash that bell icon, get us to 200,000. It's such an amazing time to be here and to be involved in markets. 2025 is going to be absolutely wild, as we've already expected for months and months and months. And if you're interested in staying up to date with everything from the investment side, the swing side, the day trade side, then remember to subscribe to one of the best communities on the internet. Thank you so much for making this happen, guys. We'll see you in the next one. And remember, for now, it doesn't really matter if you're feeling like you're missing the bottom, because there are so many opportunities on a rally. And you can even see, look at the Magnificent Seven stocks. Those things are doing absolutely nothing yet. There's still so much up. You go look at some of the stocks, Google, Amazon, some of the ones we'll cover in our weekend video, and you'll see that like some of those have great structure if they are able to recover. So for now, we look solely at the 200-day. We keep in mind that a low could be formed, and we go from there. Bye for now.